Hello and welcome. You're watching The Money Show. I'm with you, Kavita Thapliyal. And yes, as you can see, this is our Women's Wednesday edition where we focus on women investors and women viewers and help them navigate their crucial financial decisions, help them align their financial strategies with their financial goals. And every week, the person who helps you to do this is Mr. Harshvardhan Roongta, who's joined us today live as well. Harsh, hi, good evening. Welcome to the show. And yes, we've got very interesting set of questions today. And so before we begin, Harsh, let us just quickly flash our WhatsApp number and email ID on the screen so that everyone who's watching the show wants to get their financial planning done, especially women who have just started off their investments. You've got your first salary, you're retired or anything, your kids' education goal or anything about your financial goal that you are able to dream of. Trust me, you can achieve it also, and our experts will help you achieve that. So just note down the WhatsApp number, the email ID that's flashing on the screen, and we will help you navigate all of those decisions and strategies as well. Harsh, hi, welcome. Let's begin. And let's take Sonali's question first. She says that she is an IT employee from Bangalore and she wants to start her investments in mutual funds. But she has a credit card outstanding, which is almost of 50,000. She's unable to pay it in full right now. So she wants guidance in terms of how should she pay this off in terms of installments. Can she convert it into an EMI? If she does that, what's going to be the overall cost, that she will end up paying apart from the 50,000 that's an outstanding? And later on, she wants to start an investment also. She wants to start 10,000 in mutual funds for 30 years. And she says she will stop investing after 25 years. She can also increase or step up her investments every year as and when she's able to. But first, she really needs to get rid of the credit card outstanding. So Sonali, thank you so much for sending us your question. And you are absolutely right. This is a liability, this is a burden, and you should be paying it off now. Depending on your financial situation, it depends. You want to pay it off in full, or as you have already asked in your question, that you want to, stagger it out. So, Harsh, what's going to be the right strategy? Even if one wants to stagger it out and maybe made the minimum amount, you will still land up attracting interest over this amount. So what's that going to be? And the EMI option, how well does that work? And you cannot have an EMI option on all kind of outstanding. Those are selected outstandings which the banks also allow. So how can one go around it?
So, well, Kavita, this is a very serious issue, and I think Sonali is rightly thinking about it. So, the first point is that any outstanding on your credit card dues, the interest that the credit card issuer charges is exorbitantly high. It is usually in the range of 40 to 50% per annum. So, Sonali, you would have to most certainly focus on how you can get rid of this outstanding. The alternative for you is, of course, to go for a revolving credit. There are certain purchases which the card issuer allows you in the form of an EMI. So you have to check whether your spends qualify for EMI. If it does qualify for EMI, then most certainly you will think of converting into EMI and then look into the cost part of it. If you're going to default on the payment and just make the minimum balance payment, then you must be very well prepared of the interest that is going to be charged onto the outstanding amount, which I've already mentioned is in the range of 40 to 50%. Further, you must also remember in case of a default in the credit card payment, then you will have an issue with regards to your CIBIL scores getting affected, because of which, getting loans in the future may be difficult. So right now, I suggest that you keep your entire focus on how you can manage to get one, if you can also talk to your existing banker where you have a salary account, check with them if they're offering you a personal loan. If they offer you a personal loan, that interest on personal loan is going to be lesser than what a credit card issuer is going to charge you. So there is an arbitrage wherein you can borrow in the form of a personal loan, pay off your credit card completely, and then focus on clearing the personal loan as soon as possible. So that is one of the alternatives. Alternatively, you can also look at any investments that you have. If you have, it would be highly recommended that you liquidate those and pay off the credit card outstanding, because you don't want a situation where your outstanding is, getting you an interest. Is charging you an interest of 40 to 50%, and whereas there's some money lying in investments. I don't think that's a smart thing to do. So overall, I think investments can wait for sure. Ensure that you start your career, you make sure that your career isn't affected by bad CIBIL scores. So, I think you can also check with your employer if they're willing to, extend some advance to you. But just ensure that your outstanding of the credit card is settled as soon as possible.
Your credit score is very important and that should be really maintained healthy. So yes, as soon as possible, just get rid of this outstanding and later on you can focus on investment. But just in case you want a strategy on that as well, Harsh, what would you recommend?
So, I think, very clearly she has to first get rid of all the high interest bearing loans that she has. Once she completes those, then I think it will be a free mind to start with investing. So while she has been very conscious about how she wants to invest for long term, I do not want to deviate her intents from paying off the credit card loans, etc. I think that's more important. So let her completely focus only on that. So alternatives are, I said, look for a personal loan from the salary account that you have. Talk to your employer if they can extend some advance. If you have any investments, it's time to probably liquidate them and pay off the credit card outstandings.
All right, so Sonali, what you may want to do is just get rid of that credit card outstanding, and later on, if you want more guidance or maybe you have free cash, you already said we've given you an investment strategy, but yes, you can write to us again, and we are help to assist. But let's move on and. Let's take Lovely's question. She is from Amritsar and she wants to, okay, it's a very cute question, Harsh. She says that after 20 years, she would want to give her father some money, since she's been growing up and she can see her father doing all the financial help. So she wants to start investing her pocket money and later on she would want to give this money to her father. Very cute, Lovely. You're a college student, and you are thinking about something like that. That's very empowering and very nice of you. But the intention is very right. But you might also want to think about your personal financial goals. But having said that, Harsh, how can she start doing this now?
It's such a lovely question from a person named Lovely. So, Lovely, very nice thought. In a college student, you see your father working very hard. You want to make sure that you return the money that he spent on you. So I'll only say one thing. All parents should be very happy to spend for their children and, try and give them the best that they can. So in case you are feeling guilty about the hard work that he does and spends for you, or you feel uncomfortable in that context, I don't think you should take that kind of stress. I mean, I'm sure your parents are more than happy and more than proud of you. So don't be guilty about it. But I would simply say, as a parent, I can always say this, that all that your parents would want is just walk up to them every day and just tell them that you like them, you love them. I think that's more than enough for them. So don't feel guilty. Don't take the stress of the money that your father spends on you. It's most certainly very happily he's doing it for you. Now, with regards to the other intent that you said, that you want to invest something for your future, yes, you can most certainly start doing that out of your pocket money. And I think that's a very good thing to do. Even if your pocket money is small, and this actually goes on to other college students as well, if you're receiving an X amount of money as pocket money, there is an option for a choti SIP now, where you can invest as little as 250 rupees every month, and you can start and you can embark on the journey of investing and financial planning. So one of the options that is available, like SBI Mutual Fund, has a Jan Nivesh SIP that allows you to invest about 250 rupees in an SBI Balance Advantage Fund. So I think it's a great thought. It's a great a step to take towards the financial independence. Start with investing your pocket money. As little as 250 rupees is also that you can start with. SBI is one of the options that I've already suggested to you.
All right, so all the best, Lovely. If in case you need more guidance, you can write to us again. But then let's move on and let's take Minakshi's question. She watches the show regularly. Thank you so much, Meenakshi, for those kind words you written in the question. So she will be taking a home loan, Harsh, of 75 lakhs. She just wanted to understand the investment timeline. She doesn't have any investments so far. She wants to balance her EMIs and her SIPs. That is what she's planning to start her investments with. So yeah, she just wants to know the trajectory and how can she go about it. Very interesting question. Thank you so much, Meenakshi, for reaching out before taking the loan, and you really need to have to do a bit of a homework. And yes, Harsh will be guiding you as to how can you take the best route or strategy to maintain that balance between EMI and SIPs. And this question will be helping a lot of other viewers, as you've already written in the question. So thank you so much for asking this. And Harsh, this a lot of time becomes very difficult. You already have have an outgoing going in a form of an EMI, and then you have an SIP also, which you don't want to stop. But then if your finances are too tight, you might just want to stop that. How can one consciously make an effort and plan it really well in order to have an EMI going and also an SIP going?
So, well, Kavita, again, I mean, this is very relevant because we are always at that juncture where we are deciding how do you balance the both. Because in the Indian mindset, we've seen people wanting to clear off loans as fast as possible. And by the virtue of that, you land up having such large EMIs that you have no option and no room left for any investing. So while you're taking a loan, there are two options that you can explore between. One is very simple. It's a low tenure, but the EMI then goes up. Okay, so you take a loan, if you're eligible, say for 20 years of a loan, you take a loan for only 10 years, and the EMI goes up so that you say that I want to finish the loan as fast as possible. Alternate two, you go for a longer tenure, so the EMI comes down. Okay, so then if you're taking a 20-year loan, the EMI per month, of course, will be lower and compared to the other way around. So, as an individual, you have to understand there are multiple requirements we're going to have. One is that you need to, of course, pay your loans so that you can eventually become, loan free, debt free. The other is that there are certain financial goals that we will be encountering in our lives, which could be children's education, could be retirement, etc. Now, imagine a situation if a person has taken very high EMI only with the single thought saying that I don't want any debt on myself going further and I want to clear the loan as fast as possible. So all your monthly savings you're putting into EMIs and nothing is going into investing. Now suddenly when you're and hopefully in the next X number of years you will be debt free. But when your children are eligible for going to school, higher education, or for some financial institutions and you have to pay the fees, and if you have no investments made by then what happens in that situation? So you need to have a balance of both, wherein your EMIs are also well structured and there is an investment plan in place which takes care of your future requirements. Now the tenure of the loan, the quantum of EMI depends on several things. It depends on what stage of career are you in, what are your incomes, what is the growth trajectory. You may start with a low EMI today and then probably increase the EMI later on as your career progresses. So these elements you'll have to keep in mind. Be mindful that only paying EMI is not your financial goal. There are other things as well. So balance out both, giving in consideration how your requirements are going to be in the future. Like when, if you have children, when do you need to pay for their higher education? When are you going to retire? So you need a corpus for retirement as well. You just don't want a debt-free house at that point with no money left for retirement. So you'll have to balance out both, keeping in mind the factors that are given you. So choose wisely between lower tenure and higher EMI or a longer tenure and a lower EMI. So there's nothing right and wrong. It's just that how well a particular scheme fits into your financial plan.
Harsh, let's move on. Let's take Rashi's question. How many funds are good to have 5,000 rupees investment? Very interesting question. At least she's not someone, Harsh, who's bought multiple funds, by investing 500 rupees in each. So, yeah, that's really a confusion among investors. Some people have 5 funds, some people have more than that, some people have just 1 fund. So, what's the right way to go about?
So, Kavita, we've had so many instances where people come with 5,000 rupees to invest and they have 5 schemes of 1,000 each. Well, that is really not required because you must understand that any one scheme that you invest your money in, that invariably invests into about 30 to 40 companies. So whatever money you're investing is getting split across many, many companies. So for diversification sake of purposes, if you have, 4 or 5 schemes, it just leads to more duplication and more administrative burden on yourself. Ideally for a 5,000 rupees, you can just have one scheme, which is a flexi cap or a multi cap fund, and that should be good enough. At best, if you want more diversification, you can try and look at 2 schemes, wherein one scheme will be focused on a particular segment. So you may say that, okay, I want one mid cap fund for sure, or I want one large cap fund for sure, and the other could be C cap or a multi cap or any other one. That's fine. So answering the question, just one scheme for a 5,000 is good enough. If not, at best, you can go up to 2 schemes. You don't need more than that.
All right, let's move on and let's take Priya's question. She's from Orissa and she wants to accumulate corpus for her child education. She can invest 1,000 now. Now she wants to know whether it should be mutual funds, in equity, and gold or silver. What's the right way to start investing? And how much can she accumulate after 20 years?
So, Kavita, at this juncture today, as we speak, if we were to talk about investing in equities, the last 1 and 2 years, of equities have been very, very disheartening, as I may say, for many investors. If I talk about not investing into gold and silver, I mean, it's not going to go down well with people. So, but anyways, if I were Priya and had to take a decision for myself, I would definitely invest into mutual funds. I would not allocate this 1,000 rupees that I have only to gold or silver. What I could additionally do is through mutual funds, I could do a multi-asset allocation strategy. As in, if I'm investing in a multi-asset allocation fund, I would have equity, debt, gold, silver, all that automatically in my portfolio. So I think from a longer perspective, she's asking for a 20-year time horizon. I think it would be better that she goes for a multi-asset fund wherein she'll get a mix of everything. The options I can give her, just pick any one. I'm giving two names because I don't know which name you would be comfortable with. So I'm giving you one Kotak multi-asset allocation fund and an SBI multi-asset allocation fund. Priya, just pick any one. You don't need to take two for 1,000 rupees. I'm giving you two, big names so that, if you're in Orissa in a place where you don't want and not comfortable with certain fund houses or certain companies, at least these two names are ones that you would relate with and you can invest with. So just take any one of the two, Kotak multi-asset fund or SBI multi-asset allocation fund. If we assume a 12% kind of a returns over these investments over 20 years, you could expect around 10 lakhs from this investment. But please remember, this is an assumption we're making at a rate of 12% over the next 20 years.
Right. Let's move on and let's take next question. This is from Asha. She says she's 30 years old and she just got married and she wants to take the right step in the right direction. In fact, she is doing that. So, baby financial planning. She wants to get the strategy right, from maternity to insurance. She and her husband are slightly clueless on this aspect, which is why they're asking for your guidance. So, congratulations, Asha. I don't know how many people really do it, but it's a very relevant question that should be coming in one's mind, to be parents. And you've taken the right step in the right direction, as I just said earlier. And Harsh, we know how much of your investments can get into it. It's right from the maternity stage. You should be knowing what kind of insurance cover you should have that covers all the maternity cost, because that's also again very expensive. And then cost around raising the child, that is also there. I mean, it's just not the hospitalization we are talking about, just not those first initial days. We're talking about an entire journey, an entire process, of bringing up a child. So that is expensive, looking at all the cost around going up. So how can one go about it?
So, well, Kavita, this is excellent as an example because being just married and both the husband and wife as a couple are sitting down and talking about financial journeys, talking about financial obligations that will come in the future, plus talking about maternity expenses that are likely to happen. So, I think it's a very, very healthy conversation that every couple should undertake, when they're just married or whenever they realize about it. So coming to the point, so well, in terms of financial planning, there are a few things that are going to be required. So first step of financial planning is to have adequate insurance. Now, what does this mean? So I'm using two terminologies. I'm using adequate and I'm using insurance. So many families do have insurances, but are they adequate is another question that you need to look into. So, in simple terms, if I would just put all the earning members of the family, should have a term cover and they should have disability cover. So, which is basically covering loss of income. So, if the income generating member of the family suffers with any kind of disability or loss of life, the financials of the family should not be affected. And that is why you adequately buy the right kind of covers so that you protect that. And all other members, whether earning or non-earning, should have an adequate hospitalization expenses policy, which is a health insurance or a Mediclaim that we're talking about, should have adequate health insurance. Now, many policies do offer maternity covers, but there is a waiting period of 3 to 4 years, and there is a cap on how much claim is paid. So you may have an expense of about 4 to 5 lakhs for maternity towards maternity expenses, but your policy will pay only a amount that is capped in the policy, which usually is about 50,000 rupees or a lakh of rupees. So there are two or three things that you have to keep in mind. One, there is a waiting period. So the moment you buy a policy, in the first 3 years or 4 years, the maternity claim is not going to be paid. Secondly, even if it is paid, there is a cap on the maternity claim. So even if your policy is for 10 lakhs, your maternity claim will not be paid beyond, say, 50,000 rupees or 1 lakh of rupees. The third criteria is that the maternity claim will also be paid for only X number of times. So you will have it paid only for, say, one child or two children. It's not that you have, suppose you have more than two or three children, the policy will continue to pay that. So you'll have to be mindful of these things and then plan buying a policy with maternity cover or otherwise, because there's an additional cost that you will have to pay for, as in terms of premium as well. Now, with regards to the investing part of it, you're very rightly thinking towards investing for your short-term, medium-term, or long-term goals. So again, you'll have to balance out how do you comprehensively plan your finances in the entire life that you're looking at. So starting from a married couple to having children to then coming to mid-career, then retirement, you should have to need to plan the entire process. I would suggest look at consulting a SEBI registered investment advisor, meet the person, talk to them about this entire journey that you wish, what are your goals, and he or she will be able to design the entire comprehensive financial plan for you.
Again, a very interesting question. This is Nilakshi from Maharashtra. She's 65 years old and she wants your guidance to buy copper. Now, this is a very common question right now, especially looking at the way copper is now taking the lead as far as base metals are concerned. And after gold and silver, it's copper that's booming up. As an investment, how do you look at it, and how can one actually invest in this commodity?
So, well, Kavita, first I'll answer this question with relevance to Nilakshiji's age also. She mentioned in her query that she is 65 years old. So I wonder at this age, she's planning to trade in copper or just invest in copper. In what form? I'm not too sure. So ma'am, I suggest that you please have a detailed look into why are you trying to invest into copper? Is it that you want to benefit out of the rising copper prices or just trade in it? So, well, there are essentially two ways that you can do this. One is, of course, you can trade or buy the futures contract on MCX, the Multi Commodities Exchange, where they're traded actively. So you can buy the futures contract and trade in it. Or the other way would be to invest into companies that are into copper mining and production. So you buy shares of those companies. So you're typically not investing in copper directly, but you're participating in the copper prices appreciation through buying into shares of those companies. Well, let me caution you and all others listening. I mean, it's not as simple as just if I'm naming, you asked me a question, I answered it. However, I would not recommend anybody who's a layman or a retail investor to explore both of these options because they're not as simple as they look. It's not like you're buying into copper futures, prices go up and you straight away make money. There are margins, there are a lot of other things. There is a lot of volatility in this particular product. So you need to understand all this properly before you jump into it. So be very mindful, very cautious. I've simply answered the question because you asked it. Doesn't mean that everybody listening to this has to start buying copper futures from on MCX or buy into shares of companies which are producing or mining copper. So, and consciously, I've not given names of companies which are in this sector because that's not the intent of this conversation.
All right. I think with that, it's a wrap as well. Thank you so much, Harsh, for taking time out and helping our women viewers and investors navigate all their important financial decisions, investing decisions today. Thank you so much. And before I sign off, I'm going to leave you with our WhatsApp number and email ID where you can keep sending us your portfolio questions. Thank you so much for watching. Goodbye.